with pictures here.
Yeah. No, it's
Curious to
great.
get
It's a
your
great explainer.
sentiment.
And it really is a simple business. Banking is a very simple business, but it relies on trust,
Yes.
right? We have to
Hmm.
trust that the bank is prudent in making loans, which
Hmm.
for the most part, they are. I mean, they actually are, but for the most part. You have to trust that they are prudent in their balance of securities and loans. Something broke down there, though. So when foreign governments uh, rejected the US, for lack of a better term, and there was this alignment of the two axes in the world, and the Chinese stopped buying, and the Russians stopped buying, and Japanese stopped buying treasuries. And at the same time, we decided to increase our spending by handing out stimulus checks at all post 2020. What happens? Deficit, massive, trillions, four trillion at the peak. Well, if you have 4 trillion of deficit that you have to finance, you have to issue more bonds. If you issue bonds, someone has to buy them. Right? If you're a seller, someone has to buy them. Well, if there's no buyers, what you can do is you can basically mandate that the banks buy your bonds. Now, it just so happens they need to buy these bonds, as Michael just showed you, because as that stimmy checks get sent out to individuals and tax cuts go to corporations, they do something with that money. They put it in the bank. Well, when you put money in the bank, it creates demand for either loans or securities, bonds. Problem is, everyone had a lot of money, so they didn't want to borrow any money. So commercial lending activity collapsed. Everybody was locked down. Nobody wanted to borrow money for anything. So, we just happen to have this surfeit of bonds that you can buy. Well, it just so happens that because we're not paying any interest on those bonds, you have this problem. And this is called financial repression. So when a central bank limits the amount of interest by artificially manipulating interest rate markets, you force people to go further out on the risk spectrum.
Yes. Yes, 100%. So I think the point that I want you and I to drive home here is because my worry, right, what I think might happen here is that Liz Warren has already come out and said this, right? Basically excoriated Silvergate and the executives there and tried to label this as a crypto problem. Here, I've got a little chart that I
know,
want to,
it's so comical, right? It's so
yeah.
comical.
This is the chart that you were talking about, I think, right? Unrealized gain and
Yeah,
losses on investment securities.
This is the scariest chart. This is the scariest chart that might exist.
This
is a very scary chart.
This is not great. So, Mark, can you kind of walk us through what we're looking at here?
Yeah. So it's basically a long-term chart of the either accumulated gains or losses of the banking system.
Mm-hmm.
And what that means essentially, how would you have a gain? Well, a gain would be you bought an asset, right, a bond, and interest rates fell, and you have a gain. Or you bought some equity, and they went up. And usually banks don't buy a lot of equities; they buy a little bit of equities. They're not supposed to buy a lot of equities, but they did buy some equities. And equity markets were rising, and so on the left-hand side of the chart, you see a lot of yellow, and it's above the zero line. And there's a little bit of downturn, a little bit of fluctuation, but generally speaking, banks aren't supposed to be taking lots of risk
right
in these assets because remember the asset liability mismatch. If your customer can take their money any day, literally any day, intraday, you probably shouldn't lock up the money for 5 years, 10 years, 20 years, unless you do it, as Michael said, in a very diversified way. Like if you lend for mortgages, okay, people aren't going to pay their mortgage back right away. But as long, again, as not everybody wants their money, And this is literally this chart is a precursor to the scene from It's a Wonderful Life, where everyone rushes to the building and loan, and the one guy, he says, "Joe, how much do you need?" He's like, "I need $220." He's like, "No, that's all your money. How much do you need to get by through the week?" He said, "Well, I need my $220 because I'm afraid." Well, Joe, your money's not here. It's in, Mary's house and John's house, and that's how banks work. The money's not in the bank. It doesn't sit in the vault. So anyway, back to the chart. So on the far right side of this chart, you see this just cataclysmic, orders of magnitude, 4, 5, 6, 8 times more losses than gains that they're unrealized. And what that means is, as Michael said, as this massive wave of deposits came in 2020, 2021, even into early 2022, all these banks, Silicon Valley Bank, for example, went from 60 billion in assets to 180 billion in assets because there were a lot of companies formed, a lot of new businesses, there were a lot of ICOs, and people got all this money and they had to do something with it. So they put it in the bank. And so couldn't make loans. So what they did, they bought securities and they bought treasuries and government bonds. On top of it, there was this little problem last year that the Fed started liquidating, because the Fed used to buy all these bonds. If nobody else was to buy them, the buyer of last resort, the Fed would buy them. Well, then the Fed started QT. So they started selling, particularly these mortgage-backed bonds. And guess who was there to buy them? Because they're government guaranteed. So the banks started buying them. Well, unfortunately, when interest rates go from 0 to 5, you could do math on a 0 duration bond. You don't have a lot of loss. 1 year more, 2 year more, 5 year, 10 year. Whew. Now you're talking big numbers. And the problem is these bars on the right-hand side of this chart, basically, if all the banks experienced a run and everyone took their money out, right, to stuff it in the mattress, which is kind of what happened during the global financial crisis, which is kind of why the socks I have on exist, which is all the banks started to fail. Literally, all the banks around the world started to fail, and governments literally had to step in and bail them out and